Hi all, my name is Nefla. I belong to the Department of Logistics Management. Today, I would like to introduce to you the topic working capital. A business basically requires two types of capital. One is fixed capital and the other one is working capital. Fixed capital means the amount invested in fixed assets such as plant and machinery, land and buildings, etc. But the amount invested in current assets are known as working capital. And this is also the amount required to meet the day-to-day operations of a business, such as purchase of materials, payment of wages, etc. So, the working capital is also known as circulating capital or revolving capital. And it plays a key role in the business, just as the heart in a body. Next is concepts of working capital. Mainly, there are two concepts of working capital. Number one is gross concept. According to this concept, working capital is referred as the total amount of current assets. Under this method, the working capital is calculated by adding together all the current assets such as cash in hand, debtors, etc. And it is the quantitative aspect of working capital. Second concept is net concept of working capital. And as the name indicates, net concept of working capital is the net current assets. And here we can compute the working capital by deducting current liabilities from current assets. So, the equation to find out working capital according to net concept is current assets minus current liabilities. And this is the qualitative aspect of working capital. Next is components of working capital. There are two components of working capital. Number one is current assets and number two is current liabilities. Current assets are those assets which can be converted into cash within a short span of time, normally 1 year. For example, cash, sundry debtors, prepaid expenses, etc. are the current assets. The next is current liabilities. Current liabilities are those liabilities which can be repayable or repaid within a short span of time, that is 1 year. Sundry creditors, outstanding expenses, etc. are the current liabilities. So, a working capital consists of these two components, current assets and current liabilities. The next is estimation of working capital requirements of a business. There are many methods to estimate the amount of working capital required by a business. But basically, we are following the statement of working capital requirements to know the amount of working capital required by a business. And here is the statement or the format of statement of working capital. First, it contains particulars column and two amount columns. The first amount column is the inner column and the second amount column is the outer column. We start the statement with current assets, and under the current assets we write the different current assets that are given in the problem. Here, cash in hand is the first item. If an item cash in hand is given in the problem, we have to consider that item first. Then that can be directly written in the outer column. After that, the second item is inventories. Inventories means stock, but it contains different three items, that is stock of raw materials, stock of work in progress and stock of finished goods. All these together have to return by totaling in the outer column. Then next is receivables. Receivables consists of sundry debtors and bills receivable. We can write these columns in the inner column first. After totaling it, we can write it in the outer column. Then fourth one is expenses paid in advance. This is also known as prepaid expenses. If any prepaid expenses are given in the problem, that can be included in the statement of working capital. The last one is others if any. If any other current assets are given in the problem, we can include it in the statement. Then after that, we have to write the gross working capital. And this gross working capital is the total of current assets that are entered in the outer column. So, gross working capital is the total of all current assets. The next is number B, That is current liabilities. Current liabilities which are given in the problem are listed under the current liabilities. Here, number 1 is creditors for purchases. If we are purchasing the goods on credit, that should be written first, and that is in the outer column also. Second one is creditors for wages. That means outstanding expenses or lag in payment of wages. That can be included in the statement of working capital under the heading current liabilities. The next one is others if any. If any other current liabilities are given in the problem, that can be covered under this heading. After that, we can total all these current liabilities and write here as total current liabilities in the outer column. The next is working capital. Working capital is the difference between the total of A and B. That means gross working capital minus total current liabilities is the working capital. Then after that, there is a main point that add provision to contingencies. There may be some uncertainties arise during the course of business, and in order to maintain these contingencies, we have to add a provision to the working capital amount calculated. That is provision for contingencies, and that is calculated on the basis of working capital figure which you have calculated just earlier. Then last one is net working capital. After adding this provision for contingencies to the working capital, we will get the net working capital, and it is the result of the statement of working capital, and it will be the amount required for the day-to-day, for meeting the day-to-day transactions of a business. Then next we move on to a problem. From the following estimates, you are required to calculate the average amount of working capital required. Here we have some items given in the table. Average amount locked up in stocks. So here two sub-classifications are there in the average amount locked up in stocks, that is stock of materials and stock of finished goods. And we have to consider these items under the heading current assets. So first of all, we have to draw the statement of working capital requirements. Here, the statement showing the working capital requirements is drawn. The first column is particulars, then two amount columns are drawn, and first item is current assets. Under the current assets, we have to take the item stock, and under stock, two subclassifications, stock of materials and stock of finished goods. In our problem, stock of materials is rupees 20,000. That should be entered in the inner column because one more subclassification is there to combine to the amount locked up in stocks. That's why we are incorporating it in the first column, that is inner column. Okay, 20,000 is written in the inner column. The next one is stock of finished goods. Stock of finished goods is also written in the inner column, that is 25,000. 25,000 is written in the inner column. After writing this, we have to add these and write it in the outer column. So by adding, we will get 45,000. That can be written in the outer column because it is a total. The next, we have to look at the problem. Second item is average credit given. When we are conducting local sales, we have given credit to our buyers. That is average credit given. So 3 weeks credits are given to the buyers. So we have to compute 3 weeks amount only. Here 2,08,000 is given and this amount is for the whole year. So we have to compute the amount of local sales average credit given by multiplying this amount 2,08,000 into 3 divided by 52, that is the whole number of weeks in a year. Okay, we know that there are 52 weeks in a year. So in order to find out the 3 weeks amount, we have to multiply this total amount for the whole year into 3 divided by 52. So we can term it as debtors because these are the debtors by whom we have to receive the amount from our sales. Local sales 2,08,000 to 3 by 52. The calculation is written here. By multiplying this, we will get the amount, that is 12,000 for 3 weeks, we have to give 12,000 rupees credit. The next item is export sales. Here we are giving 6 weeks credit for the export sales. So the total amount given is for the whole year, that is 6,24,000. But we have to compute only for the 6 weeks. So in order to find out 6 weeks credit, 6,24,000 into 6 by 52. 52 is the total number of weeks in a year. So we can compute it in the next page. 6,24,000 into 6 by 52, that amounts to 72,000. After that, we can add these together. 70,000 plus 12,000. 84,000 is the total debtors. Then we can move on to the question again. After completing the stocks and credit given, we have lag in payment for wages and purchases. But these two items belong to the heading current liabilities. So we have to write it only under current liabilities. So we can calculate the total current assets. Only after computing the total current assets, we can go to the current liability section. So gross working capital is the 1,29,000 rupees. 1,29,000 rupees is the gross working capital by adding together 45,000 and 84,000. That is totaling the current assets. The next is the heading number B. Capital letter number B, that is current liabilities. Only two current liabilities are there. Number one is creditors and number two is outstanding wages. We have to write these two items in the outer column. Lag in payment for purchases is 3 weeks. Just we mentioned earlier, 1,56,000 into 3 by 52 will give the amount required for 3 weeks. So 1,56,000 into 3 by 52, that amounts to 9,000 rupees. The next is outstanding wages. The total amount for the year is 4,55,000 and the credit given is for the period 2 weeks. So we have to compute only for the 2 weeks period, that is 4,55,000 into 2 by 52 and that amounts to 17,500. Only these two current liabilities are given in the problem. So after writing these two, we can add it together and it will give the total current liabilities of rupees 26,500. Then we have to compute the net working capital. Net working capital, we have already mentioned the last slide, that is concepts of working capital. Net working capital is as per the net concept, the working capital amount is computed by applying the equation current assets minus current liabilities. So we can compute 1,29,000 minus 26,500 and it amounts to 1,02,500 is the net working capital. That is by deducting current liabilities from current asset. Then next we can see here, add 10% to provision for contingencies. 10%. So this 10% is for meeting the uncertainties that may arise during the course of the business. So we have to compute 10% on the net working capital. This figure is computed mainly on the net working capital. That is 1,02,500 into 10 by 100. That will be the provision for contingencies. I repeat, 1,02,500 into 10 by 100. That will be the provision for contingencies. That amounts to 10,250. By adding these two, we will get the average amount of working capital required by the company and that will be 1,12,750. So, I am concluding that after computing current assets, current liabilities, we have to deduct the current assets from the current liabilities and that will give us the net working capital. And to this net working capital, we have to add 10% provision for contingencies. And after adding this, we will get the amount of average working capital required for the business. That's all about the session of working capital. I hope you all understood the session. Thank you so much for watching.